In the ever-evolving landscape of international trade, the ongoing trade war between the United States and China has reached a new and significant juncture. As tensions heighten, China has responded to the latest round of tariffs imposed by the U.S. with a series of retaliatory measures aimed at American companies operating within its borders. This move not only underscores the deepening rift between the two economic powerhouses, but also highlights the intricate web of interdependence that characterizes their relationship.
The U.S. has long been a critical market for Chinese exports, and in response to the imposition of new tariffs on Chinese goods, Beijing has targeted a diverse array of American firms, including tech giants like Google, agricultural equipment manufacturers, and major apparel brands such as Calvin Klein's parent company. These retaliatory actions are emblematic of a broader strategy by China to assert its economic sovereignty and protect its domestic industries from what it perceives as unilateral and aggressive trade practices by the U.S. The implications of these measures are profound. For companies like Google, which has invested heavily in the Chinese market, the new tariffs could hinder their ability to operate effectively. The tech sector is particularly sensitive to trade tensions, as it relies on global supply chains and access to international markets. Restrictions on American firms could lead to a slowdown in innovation and collaboration, ultimately affecting consumers and businesses alike. Furthermore, the retaliatory tariffs on coal and gas signify a strategic pivot by China to leverage its energy resources as a bargaining chip in the trade negotiations. By targeting these sectors, China not only aims to retaliate, but also seeks to bolster its own energy independence and reduce reliance on foreign imports. The trade war has far-reaching consequences beyond the immediate economic impact. It has sparked a wave of uncertainty among investors and businesses, leading to fluctuations in stock markets and shifts in global supply chains. Companies are now faced with the daunting task of navigating an increasingly hostile trade environment, prompting many to reevaluate their strategies and consider alternative markets. As tariffs escalate, the cost of doing business rises, and the burden often falls on consumers, who may ultimately face higher prices for goods and services. Additionally, the trade war has catalyzed a broader discussion about the future of globalization. As countries reassess their trade relationships and prioritize domestic industries, there is a growing sentiment that the era of unfettered global trade may be coming to an end. This shift could lead to a more fragmented global economy, where countries prioritize national interests over international cooperation. The repercussions of this realignment could be felt for years to come, affecting not only economic policies but also geopolitical dynamics. Amidst the turmoil, it is essential to recognize the resilience of both economies. The United States and China are not only competitors, but also deeply intertwined partners. Trade between the two nations has fostered innovation, created jobs, and contributed to economic growth on both sides. The current trade war, while rooted in legitimate concerns about trade imbalances and intellectual property theft, risks undermining the progress made over the years. A collaborative approach that prioritizes dialogue and negotiation may yield more sustainable outcomes than continued escalation. As the trade war rages on, it is crucial for stakeholders on both sides to seek common ground. Businesses must adapt to the changing landscape, embracing flexibility and innovation in their operations. Policymakers should prioritize diplomacy over confrontation, recognizing that a cooperative approach can lead to mutually beneficial solutions. Ultimately, the path forward will require a delicate balance between protecting national interests and fostering a global economy that thrives on collaboration and interdependence. The stakes are high, and the decisions made today will shape the future of international trade for generations to come.